Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about Friday's market sell-off, Coca-Cola's earnings beat this morning, and this week's upcoming earnings report. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. On Friday, the market declined sharply across the board with the NASDAQ returning to bear market territory. What do you think is in store for this week?
Good morning, Allison. Good morning, everybody else, and welcome to a new week. Certainly, Friday was brutal to say, to call it what it was. Right, it started ugly and it continued to get uglier throughout the day, and that's one of those where it's tough as an individual when the day starts out that, if you check your balances in the morning and then you just keep like looking back and saying, oh my gosh, that's one of those days you kind of have to look away and let the market go, right? Nothing really is going to change things on a Friday. People are going to safety for the weekend for whatever reason. And when Fridays go negative, there's nothing you can do to stop them. Now, I will say for when Fridays go positive, and we haven't had one of those in a while, but you remember, it's been a decade of Fridays, right? Friday, yay, because the market screams higher and everybody's piling money in. So the good days will return. That I promise you, but I think it starts this week, but we shall see. When you look at exactly where we are, last week, 4th straight negative week for the Dow, 3 straight negative weeks for the S&P and NASDAQ. And the NASDAQ, you can see the bullet there if you're on a computer where you can see that return to bear market territory. So really, we'll pull up the QQQ here to be able to look at that because that's the most painful of all of them. Again, this is the NASDAQ. We'll pull out, okay, it's already a 1-year chart. So you go down here, year-to-date change, it says 18.21 again for year-to-date, but the actual peak was back in November, December. So that's where you get that bear market of, again, 20% off of the most recent high, which is up around here around 400. So, that's kind of where we are. Where do we go from here? Well, when you take a look at this chart, we did go back basically to June of last year. Was last time we're this low. So it's good to zoom out, keep things in perspective. If I click a 5-year chart, you're gonna be like, oh, this isn't so bad at all. Well, it depends on your investing experience. If you've been investing for the past 5 years, you look at this and say, okay, another thunderstorm in paradise. If you started investing in December or November, you're looking at this like the world is literally ending, right? So you do need to zoom out and say, it is a long game, but I will say though, look at the March 2020 drop of that 35% in a month and kind of look at the drop we've had now. In a way, this was nice because it was a rip the Band-Aid off moment. Again, if you remember March 2020, pandemic ensued. We're locked in our houses. There was probably quite a bit of selling, but then look at the snapback from that. So, am I worried about this? No, as a long-term investor, not at all. As a short-term investor, I am worried that people are going to what I call take their football and go home, i.e. if they just stepped into the investing world, they're going to be like, oh, this is crap, right? This is the experience they've had as a straight down move, not, decades of straight up moves, right? But I will say sunshine will return in paradise. I do think, honestly, that this week, I'm not necessarily calling a bottom right here, but we're right at where we were before in the NASDAQ. Switch over to the SPY, you're going to see a similar story and just not quite as bad. But I do think, we're retesting those lows that we had in early March, and I don't think we break them. I think those hold. So again, that's a technical indicator, which I don't put a whole lot of faith in, but others do. And I think they become literally resistance of that edge. So I think people are going to start buying in this week. I have a bunch of buying to do this morning. I'm going to buy right into this negative open. When you look at the futures, I'm not scared to buy here. I'm really not. Futures were down over 1%. I think things are going to trend up and we possibly end up in the green today. So overall, Allison, last week was ugly, but I think when you see markets have those big ugly down days, that means better times are going to return.
Next, Coca-Cola beat earnings this morning. Is ticker KO a buy, sell, or hold?
Yeah, we are laughing this morning about the ticker KO, and I don't know the history of why Coca-Cola is KO. You know, it's been around for a long time, if you will. Again, one of the original Warren Buffett stocks, and again, you can see it in this first paragraph here. I don't know why they're KO and not cola or something like that, but they've been around forever. So it'd be interesting if you figure out that backstory, just send it to me. Be interesting to know. But this morning they started off this week is the busiest week of earnings weeks. So if you think of a calendar quarter, obviously 12, 13 weeks. And of that, one of those 13 weeks is going to be the biggest for earnings. That's this coming week. So a lot of numbers out and things can turn around. Obviously, things can sell off even harder if all the earnings are terrible this week. But really, people are looking for good news stories out there, and that's what they got this morning out of Coca-Cola. Top line and bottom line. So again, revenue and earnings both beat, and I don't know about their guidance yet, but I would imagine haven't heard anything negative yet. So pretty significant beat when you look at the numbers there. Let's look at the chart though. You know, this is one of these stories. I do have Coke in the book, not really by choice. But I inherit it, when people move their money over to Ankerstar Wealth, there's some things that they've been invested in a long time. And Coca-Cola is one of these long-term holds. People that have been in it, you look at the 1-year chart, this looks like a dramatic move, but this is 52 at the bottom and 66 at the top. So, this isn't a 10X move. That's a math on a Monday, goodness, what, 22% move higher there over the course of a year. 5 years, if you go back to 2020 before the big sell off, it was at 60. It's hard, it's been 2 years plus, and it's made what, 10% from the highs it was back in here. So again, this thing has not been screaming higher. So to answer the question, I like the company. I think there's a lot of competition in the space. Coke's like Walmart to me. They're always going to be there, and they're the big gun in the room, if you will. And they're buying people, and there's lots of things they're running their business aggressively. I would say this is a hold. If you have it, that's fine. You get 2.7% in a dividend yield. When you look at forward, PE is around 28. That's a little high for sugar water myself. But then again, they're like, Steve, how can you say that when you love coffee investing? I'm like, okay, valid, right? I have no argument for that. But I do like the coffee side of things more so than than Coke or Pepsi, if you will. So overall, Austin, I would say just I would give Coke a hold. I would not buy in here at 66. If there's another sell off and you want to add some to your portfolio, then you would do so then.
Last, several large technology companies release earnings this week. What is your expectation?
Well, before we get into that, you see some things that pop up on CNBC, and folks that have been to the office here, obviously we have a big screen TV that's got CNBC on, and they're like, you watch that all day? And I'm like, well, I kind of don't watch it at all. But I have it on, and I have it on silent. I certainly don't want to listen to anybody on TV because outside of the names that are on TV, the reporters, the journalists, folks that they have on TV tend to be extremist, right? It's either, life is rosy and everything's perfect and the stock market's going to double this year, right? No. Or it's going to crash, it's going to go to zero, it's all rigged. No. So those are the people they have on TV, not people that say, take a breath, look away when you need to, and get right back at it when you can. But I do have it on, and so I can catch headlines like this. And when I see headlines like this, that's when I look over at the TV and kind of, hit the volume and see what's going on there. But GM's going to produce electric Corvettes. I don't know. Is that going to work? I don't know. Certainly, if you've seen the Mach-E Mustang, it does not look like a Mustang, and of course doesn't sound like one either. So I don't know if I haven't followed the Mach-E Mustang numbers, but I guess there's enough pressure out there to make electric Corvette. So that's kind of I'll just give that interesting and move right on to these earnings that are coming up, which was Allison's question. So back to, I talked earlier about the busiest earnings season week of the year, 160 companies. But when you look at those companies, look at the size of these players. This bottom, if you can see the highlighted area there, actually I kind of blocked it there. Well, it looks like it's going to block it no matter what I do. Okay, so you got Amazon, Apple, Alphabet, Heard those names? Yeah, those are three of the top five in the Ankerstar Wealth book. So to say that this week is going to move the market, I think all of these are oversold. When you look at any of those three, they're screaming buys in my book. I would put Microsoft next. I love Microsoft and have for years. I was in it early and then kind of cashed out, and it continues to reinvent itself, if you will. I thought I was left for dead for somebody like Apple coming along, but they're not. They're still out there, and they're a main player out there. Even IBM beat earnings last week, and IBM is back after being kind of left for dead for a decade or two, at least as far as the stock. So you see some of the what I would call legacy names still surviving out there, and if you can survive and play the long game, then your stock is going to get rewarded. The one that carries the most risk, but with the most risk carries the most upside, is Meta Platforms. The old Facebook. The metaverse, people are still struggling to get their mind around this. There's a lot of negativity associated with Facebook, i.e. Meta, so much so that they changed their name. So you're running away from your past when you move and change your name, right? So that's what they're in the process of doing. So I don't know. Overall, I'm very positive about the expectations for this week in the big tech names. I'm not sure. I do have Facebook. There's if you're super high risk, yeah, add some in. If you're risk averse, then you should have no business in Facebook at all. But certainly the top three, I don't even consider them risk anymore. They're just strong American staples, and I expect Amazon, Apple, and Alphabet all to go higher this week off of the earnings reports that they have.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.